Hello everyone, welcome to our YouTube channel Investment Strategy Educator. If you are interested in investing and want to learn about investing in stock market, then kindly subscribe to our channel and press bell icon for notification of our new videos. In today's video, we are going to discuss about basics of share market part 2. As it was not possible to discuss everything about share market in just one video. If you did not watch that, I have added the link of Basis of Share Market Part 1 in the description of this video. How do you get profit by investing in stock market? By investing in stock market, you get profit by two ways. Number 1 is dividend and number 2 is capital appreciation. What is dividend? When a company earns profit, it uses some profit for expanding its business and shares some of its profit with its shareholders. It is called dividend. It is up to the board directors of the company to give dividend to the shareholders or not. A small company does not give dividends. For up to 10 lakhs, a shareholder does not have to give tax. What is capital appreciation? Let me explain you with the help of an example. Suppose a price of one share of a company named ABC was 100 rupees and now it is 150 rupees. Then 50 rupees is called capital appreciation. Difference between investment and trading. In investment, investor invest or hold shares for long term or years. It is also called as delivery. Whereas in trading, shares are held for short period of time. There are basically two types of investment, lump sum and systematic investment planning or SIP. Lump sum investment means investing whole amount at one time, whereas systematic investment planning means dividing whole amount into few parts and investing each part in a regular interval of time. There are various types of trading: position trading, swing trading, BTST, intraday trading and scalp trading. In position trading, shares are held for few months. In swing trading, shares are held for few weeks or days. In BTST, that is buy today and sell tomorrow, traders sell shares next day which he has purchased today. In intraday trading, traders buy and sell shares on the same day. In scalp trading, shares are held for few seconds to minutes. What is market capitalization? Market capitalization is the price of total number of shares. Now let us take an example. Suppose there is a company named XYZ. Total share of the company XYZ is 1000 and price per share is 10 crore. The formula of market capitalization is total share of the company multiplied by price per share. That is 1000 multiplied by 10 is equal to 10,000. Therefore, market capitalization of company XYZ is 10,000 crore. In Indian stock market, using market capitalization, companies are classified into following categories. Number 1 is large cap, number 2 is mid cap, number 3 is small cap and number 4 is micro cap. The market cap of large cap companies is 20,000 crore or more. The market cap of mid-cap companies is between 5,000 to 20,000 crore. Small cap companies have market cap of below 5,000 crore. Micro cap companies have a market cap of below 3,500 crore. What is penny stock? Penny stocks are those stocks whose market cap is very low and are traded at a very low price. In Indian stock market, penny stocks are traded below rupees 10. Before proceeding with this video, if you have not opened your Demat account yet, then kindly go to the description of this video. I have provided link of top stockbroker companies in India with low brokerage charges. In my upcoming video, I will compare and review top stockbroker companies in India with low brokerage charges. What is bull market and bear market? The bull market and bear market are used to describe how stock market is performing. Bull market means share market is rising and investor starts buying shares because they believe the market is going to rise, that is market is bullish. Bear market means share market is falling and investor starts selling shares because they believe the market is going to fall, that is market is bearish. Bear market is usually market decline or market fall of 20% or more. Bull markets tends to be longer than bear market, but market will never go only in one direction. But the sad thing is that market never tells you in advance. What is stock market correction? Stock market correction is the decline of a market by 10 to 20%. After every bull market, stock market correction occurs. What is promoter? Promoters are those who owns the company. What is promoter shareholdings? It means how much percentage of shares does promoter of the company holds. For example, suppose three friends Ganesh, Ramesh and Reena plans to start a company named ABC and they hold 75% shares of the company. Then they will be promoters of the company and 75% will be the promoter shareholding. One should prefer company whose holding is greater than 45%. When promoter starts selling their shares, one should avoid buying shares of such company because promoter itself does not trust whether their company is going to give profit in future or not. Therefore, share price falls. What is promoter share pledging? It means promoter pledges share to the bank for loan. While buying shares of the company, one should check how many percentage of the promoter shareholdings are pledged.